It is conclusive. What's happening to the metal names? They've lost their sheen as commodity prices have taken a hit globally. Steel companies in particular have been the worst hit, with cuts as deep as 50%. What's weighing in on the counters? Is the worst over? Is it even possible to say that? Darshan Mehta joins us with a closer look of what's happening here. Darshan, good morning.
Good morning, Neeraj. What we've seen as far as the first half was concerned, the metal index was cyclical, but steel stocks did extremely well. Now that we are moving into the second half, at least of the last one and a half months, steel stocks certainly have seemed to decline. So if you're seeing the metal index is down almost 16% in the last 3 months. And if you take a look at the stocks that are there in the metal index, and clearly some of the counters, look at the drop that's come in. JSPL is down 51% from its 52-week high. SAIL is down 50%. And even the larger companies like Tata Steel is down 33%, where the restructuring is going as per plan. And JSW Steel, which was considered to be the safest stock to invest in the metal index of late, has actually corrected close to 31% from the 52-week high. So the trend certainly seems to be on the downside as far as the metal counters are concerned. Look at the valuations. Valuations have corrected significantly. Valuations for JSPL, which was trading at 8 times on a 5-time EV EBITDA, on a 5-year average has come down to 5.5%. SAIL is down significantly, and even counters like Tata Steel and JSW Steel, all of them have corrected significantly from the 52-week high. And yet, despite this correction, brokerages like Citi and Nomura have come out with reports, negative reports, and they have actually downgraded the sector as such. So that's the trend that you're seeing as far as the steel sector is concerned. Now, if you're looking at some of the issues that are there, this is the price of hot rolled coil steel, and that is the benchmark that you're looking at. And over the past few months, you can steadily see that the prices of the steel prices are coming off significantly. So that's the first issue. The base price is coming down. Now, the second part is the fact that steel demand, if you're looking at what's happened as far as steel demand is concerned, that has actually increased. But if you take a 5-year perspective, right now it's in December 2018, but if you take a 5-year perspective, you can always see that it manages to cool off from levels of November to, because of cyclicality and issues in China, steel demand always comes down. So this is the 5-year chart. If you're looking at it, basically from September the trend seems to be turning down. Again it picks up, and then again you're seeing that the trend goes down. Again in November, December, the trend seems to go down, and that's the trend. So probably over the next few months you will have the China steel demand go down significantly. So that's the trend that you're seeing. Apart from it, input costs are something that is an issue for steel companies. Now, we spoke about how the steel prices are coming down, but the input costs are going down. NMDC has hiked the iron ore prices for the Indian companies, so that's the first whammy. Secondly, coking coal spreads are rising, so that's another input cost for them. So the margin spreads, the near-term hit on spreads is quite evident on steel companies, and that's why you've seen the big correction that's come in on a lot of these steel companies. If you're looking at what the brokerages are saying, Nomura expects prices to improve post March 2019. So till that time they expect issues to come into the counter. Goldman Sachs expects domestic prices to continue to fall. Today itself in the morning, Citi came out with a report in which they downgraded all the steel counters, indicating the same things, that they expect spreads to be under pressure, and they expect China demand not to come in. So that's the trend. Now what has happened is Morgan Stanley took a channel check as far as some of the steel products are concerned. Steel prices cut in December. What has happened? Hot rolled coil steel prices are down 1500 rupees, and long products are down anywhere between 1500 to 2000 rupees in India. And Indian prices are still at a premium to import. So that is another thing that impacts steel prices. So when prices are coming down, Indian prices, the global prices are coming down, Indian prices have also come off, and input costs are going down, and that's why the spread has come down significantly. Now if you're looking at the recommendations at this point of time, what are analysts recommending at this point of time? Most of the counters, most of the analysts are most bullish on Tata Steel at this point of time. 83% have a buy on them and 10% sell on them. Surprisingly, JSW Steel, which has till now been the best performer, maximum almost 21% of the analysts have a sell recommendation on it, and 56% have a buy on it. SAIL, which has been the biggest laggard, still has the lowest number of buy recommendation among all the analysts. So this is the analyst call that have come in. As far as the potential targets post the correction is concerned, that is there. You can clearly see that JSPL has an 80% potential upside as per a 12-month Bloomberg target. Tata Steel has close to 40%. So the targets are steep, but the fundamentals doesn't seem to be going some of the steel companies' way.